Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, folks. Welcome to the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia, and with me is Surabhi and Nigel. We begin a brand new day of trade. But guess what? It is the end of the week. It's our favorite day, folks, isn't it?
Absolutely.
Thank God it's Friday. Thank God it's Friday. But I don't think the bulls can say that this morning because the cues that we have as we wake up to trade are negative. There was a steep sell-off across the global markets. The Dow was down almost 600 points, 550 points to be precise. The SGX Nifty is a dark shade of red. So whatever we gained in the last many days, of course, yesterday was a weak session, but today as well looks like it's not going to be pretty at all, at least at the start. Now, what happened overnight across the globe is that banks sold off in the US, particularly one bank, SVB Financial, which is the Silicon Valley Bank Group. That stock lost 60% after it announced plans to raise $2 billion in order to offset losses from its bond sale. So that seems to be the fear now, that if interest rates move higher, if consumers are unable to pay, then those losses have to be offset and the burden will fall on the banks. And that's what's happened across the US banks, actually. The fear of borrowers defaulting is something that has caused, this collapse overnight. Now, there's a jobs report later this evening, and all eyes are going to be on that. The expectations are that the payrolls will not rise much. The estimate is around 220,000. It pales in comparison to that big rise that we saw in the month of January, 517,000. But a couple of things to remember. A strong jobs report, if it comes through, will be bad for the stock market for sure. Because that would mean that the central bank will continue its focus on strengthening of the labor market as a justification for rate increases. So perhaps more rate increases towards the end of the month at the 22nd March policy. So those are a couple of things to watch out for. But the mood is sour, not just in the equity markets, even in commodities. Brent is under pressure. There's a fall that we've seen across the cryptocurrency universe as well. So we start on the back foot this morning. The levels to watch, I think the 200-day moving average of 17,414 is something where the market has taken support. Does that get taken out today? Only time will tell. But one thing's for sure, that the ceiling of the market is somewhere around the 17,800 level. That seems to be a bit of a resistance, at least for now. But the going is not looking good, especially within financials. And, generally there is this kind of a fear psychosis that starts. Once the banks start to fall, then there's a sentiment downturn and it takes everything with it. I don't know if it'll be that kind of a day today, but the start is looking quite weak.
Oh, yes, absolutely, Sonia. I think, even for me, today is going to be a classic tussle between the bulls and the bears, with the bears definitely having the advantage as we, kickstart the innings, we kickstart the day. You've already illustrated some of the factors. I'll just point out one more data point, and that is the jobless claims report. The big one we'll get later tonight. That's the non-farm payrolls data. But the jobless claims was actually good from a bull's point of view. And why? Because there were more jobless claims than what the estimate was. The estimate was 195. The actual number was around 211. It was also higher than the previous month's number. More jobless claims, weak labor market, and you go back to the same sort of tape saying, will the Federal Reserve go a little easy on that interest rate pedal or not? So yields pulled back, the dollar pulled back to an extent. So that's something that's aiding the bulls. But what's aiding the bears is the point that, Sonia, you mentioned. And I think that really brings back some very eerie memories. just reading those headlines again, I don't want to say it, but, you do get thrown back to that 2008, 2009 era. Look at SVB Financial. This is obviously, a bank that caters a lot to the startup space, to a lot of these startups in Silicon Valley. They sold off almost all the securities in the available for sale portfolio, and that was almost $21 billion. Despite that, now they're saying they have to raise over $2 billion in equity. And that's telling you something. What was the rationale? I was trying to find the rationale for it. Nothing very clear. It just said that, some trading losses and because their clients have suffered because of high interest rates. What it's telling you is that obviously this whole rise in yields cannot be taken lightly. It's not that easy to wish away. And that really brings us back to, home over here. Now, how much of this did our market preempt yesterday, right? We were discussing this, Nigel and I, because we closed at the lowest point of the day. We could not hold on to the previous day's lows also. And there was a lot of momentum on the downside. So how much have we already sort of, priced in? How much have we reacted to? And the big question for me is, are there any maverick bulls out there who will want to buy the dip today, or whether they'll want to just wait it out, let this non-farm payrolls report get out of the way, and then take a fresh call come Monday morning? I think that's going to be the critical question, whether this dip gets bought like we saw Nigel earlier in the week. But I don't know, are there any Braveheart bulls out there? I'm not too sure.
Well, today is going to be a big Friday. And a few factors out there. You'll mention the jobs report. That's very important. The SVB reaction out there, was it an overreaction? Because the size of the bank is much smaller than the larger names, and it cost more than $50 billion of, banks' market capitalization to get wiped off. And the liability side as well of SVB is very different from all these other banks, in terms of deposits, in terms of the rates that they were given. So was an overreaction on the US banks seen overnight? If that's the case, we'll see a bit of a bounce today. So let's see whether or not that plays out. And the weekly expiry played out for the Nifty, and that's one of the factors why the Nifty ended virtually at the low point of the day. So we are better prepared in that sense for an overnight shock, because we were down close to around 170 points, close to around 1% or thereabouts. And what was heartening yesterday was the breadth of the market. That's the broader markets, the mid caps as well as the small cap index. On a day when the Nifty is down 1%, you'll expect the mid and small caps to fall more. But those indices were down only around 0.5%. So there is select stocks that are seeing buying as well. For me, that was heartening. A couple of other asset classes, the dollar index was at around 105.5. That's cooled down to around 105, closer to around 105. So that's positive from an emerging market perspective. Brent crude prices as well from around $86. It's cooled down to around 81.5. Yes, it's because of recession fears, but Brent cooling off is normally a positive for the Indian market's perspective. And the FI as well, they had covered some part of their short positions, but yesterday they added close to 20,000 short contracts. The short positioning moves back up to around 80%. And we normally look at their long and short positions. In the last few days, it had come down to around 70,000 contracts. Now it's back over 1 lakh contracts. That's the total number of short contracts. And from there, you deduct the long contracts. So around 1.03 lakh contracts is what they have on the short side. Remember, when it goes to around 1.1, 1.2, then in fact, we do see a bit of a short covering bounce that plays out. On the option side, 17,700 call, that's getting written very, very aggressively, telling you that the bears believe 17,800 is not coming in the near term. However, at around 17,600 put, there were some signs of writing out there. So that's something that the bulls will like to look at and look at defending lower levels. What are the lower levels? The Nifty, the 200 DMA comes up for you around 17,430. That's taking into account yesterday's close as well. So that's the rough level that you should be looking at. And the Nifty bank, well, 300 points lower, you have the 20 DMA. So maybe some defense of that mark. Those are the two levels you like to look at. If the Nifty bank can defend the 20 DMA, then the bulls will be in with a bit of a chance. The start is on the back foot. First star low is crucial to track. And let's see whether or not we get a bit of a bounce from there. I think by the end of today, if we get both those two levels up for you on the screen, the Nifty and the Nifty bank can defend the 20 and 200 DMA. The bulls will feel very happy.
Okay, let's see. It seems to be a long Friday, right? I hope it's not a freaky Friday of trade.
Hopefully not. Last week we had a fantastic Friday.
It was, yeah. But just one thing, right? And I guess we'll get our global guest to weigh in on this as well. This SVB issue may not be a barometer of what's happening in the rest of the banking system, because as Surabhi was also pointing out, SVB is a lender for early stage businesses. Yes. So for a lot of the startups, a lot of the health and technology based startups. And we do know that there is a funding winter that's happened across the world and in our own market. So maybe it is it's restricted to one space. Pocket. But let's see, we have many voices coming through over the course of the next couple of hours to help us wade through these challenging markets. For now, the SGX Nifty definitely is indicating a start that is well in the red. Before we kickstart the show, let me tell you what's lined up in the first half hour. We have updates coming in from the markets across the globe. Richard Harris of Port Shelter Investment Management will be with us to discuss the global trade setup. Later, our research team will be joining in. Lots of stocks in focus this morning. Many updates from corporates as well. More on that at 8:30. We'll do a fundamental stock analysis. Gurmeet Chadda of Complete Circle Consultants will be with us. All right, first up on the equities front, Neelkanth Mishra of Credit Suisse says that financials and IT together form 42% of the benchmark, making their relative weights in portfolios crucial for an outperformance or an underperformance. He says despite a 25% outperformance over the past 15 months, they continue to prefer financials over technology given the upward surprise in global interest rates. High PE sectors should be under pressure, and earnings momentum for financials has been better than that of IT. Within sectors, they prefer stocks trading well below their 10-year average PEs and a lower risk of an EPS cut and continuing EPS upgrades. In financials, he says most banks like HDFC Bank, SBI, Axis Bank and IndusInd Bank fit the criteria. And within IT, Neelkanth says that all are expensive, but they relatively prefer Infosys.
Okay, finding stocks in India that are trading below the 10-year average PE. Probably a big challenge. Let's move to the money market now. We are getting in some views from Bhaskar Panda of HDFC Bank here. He says the US jobless claims number reconfirms tight US jobs market. And the Fed Chair Powell's comments have been taken as US rates to remain higher for longer. He says the dollar index hovers above the 105 level and oil traded sideways overnight. He adds that USD-INR pair has been trading just below the 82 mark, supported by recent flows. And today we could see the pair consolidate around the 82 to the dollar pivot and trade in a range of 81.95 to 82.15.
And on the bonds, Bhaskar Panda says the yield curve in India has inverted on the expectation of a rate hike followed by a possible pause. He says the 10-year benchmark bond yield is range-bound and may trade in a range of 7.44 to 7.50%.
Well, we'll also be focusing on a lot of stock-specific action, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Tata Motors, Electra Greentech, JBM Auto, Mahanagar Gas, Natco Pharma, Home First Finance, Krishna Diagnostics, Bank of Baroda, IRB. Well, they are stocks that could be reacting to positive news flow, while the lone stock that could be reacting to negative news flow is Gokuldas Exports.
Okay, well, these are, of course, the stocks that are in focus because of news. But